What types of rates can I get? This is a question I get a lot of, and the answer is not that simple. Getting the best rates, the best products available are really tied to three key things, okay? Your income, your credit score, and your loan to value. So your income, if you are a salaried employee or an hourly employee, then we can basically guarantee your income, right, to a lender by ways of a job letter and a pay stub and maybe some tax paperwork to prove how much you've made the previous year, like a T4. The other thing is credit. If you have a really high credit score, your options for lenders and best rates are way better than not having a good credit score. And the third thing is the loan to value. If you're buying a home with less than 20% down, then you are going to have very strict guidelines that you have to stay within that are put forward by the Government of Canada and CMHC, which is a Crown corporation. So anyway, if you're buying a house with less than 20% down, you've got these very rigid guidelines that you have to stay within. Now, what happens if you don't have good income, don't have good credit, or don't have enough, or you have more than 20% down? Well, that opens up a lot more options for you. There are alternative lenders in Canada that can give you products and availability to buy or even refinance. And yes, those rates tend to be a little bit higher, but in the grand scheme of things, it's going to allow you to either buy a home or refinance the current home that you have. Where will mortgage rates be in 2024? Man, your guess is as good as mine. I just saw a chart this morning and I can't find the source and I'm trying to figure out the validity of this chart, but the chart shows the big six banks' predictions on where the interest rates will be in 2024, specifically the Bank of Canada's overnight lending rate. And most banks are in agreement. Again, I can't validate the source, so I'm going to try to do that. But most banks, according to this chart, are in agreement that the Bank of Canada will have to reduce that overnight lending rate by over 1% this coming year in 2024. So if that's accurate, if that's true, then there seems to be some relief on the way for Canadian homeowners. Should you prepay your mortgage by means of overpaying the contractual amount and putting that extra money that you're paying your lender towards principal reduction? The answer is should always be yes, but specifically now in this rate environment that we're in, absolutely yes. If you have the extra cash at the end of the month and you've got all of your other expenses paid for, all of your debts paid for, all of your investments paid for, if you have extra cash left over, I do think it's wise to prepay your mortgage, call up your lender, put extra money down on that principal reduction. Remember, if you're paying more than you should every month with your mortgage payments, then that extra money will reduce your principal balance, which in turn will also reduce your interest costs over the life of the mortgage. So yes, in the rate environment that we're in the 5.5%, 6% mortgage rates, every dollar that you spend towards your mortgage payment is likely seeing 75 cents of that dollar going towards interest and only 25 cents going towards principal. So if you overpay and prepay your mortgage with principal reduction, then yes, it is a great idea because you're going to be saving way more in interest over the life of the mortgage. When do your mortgage payments start? So let's say you've got the keys, you've signed off at the lawyer's office, you've popped the champagne, you've walked through the front door of your new home, new to you anyway, and you're starting to think, oh geez, when do we actually owe that mortgage payment? Well, we're going to use monthly as the status quo. If you're moving in on January 1st, obviously you can't do that because that's New Year's Day, but if you are moving in on January 1st, and you're paying a monthly mortgage payment, in Canada, it is law that your mortgage lender charges you the interest accrued for that month at the tail end of that month. So the payment you're going to make on February 1st is actually for the month behind you, the trailing month behind you that you've lived in the property. Completely opposite to rent, right? When you rent an apartment, you're paying first and last up front. You're paying your rent up front. So if you're moving into a rental, January 1st rents for all of January. In a mortgage and with mortgage lending and buying a home, it's a complete opposite. Your monthly payment on February is going to pay for the month behind you of January. Let's talk about closing costs when you're buying a home or you're refinancing a home, because there are going to be fees associated, generally speaking, with refinancing, but certainly fees associated with purchasing a home. So if you're buying a home and you put a deposit with your offer, that deposit is held in trust in a bank account until the day of closing. And that deposit money is actually taken off of the down payment owing at the time of closing. We've got a lot of these questions about what happens to our deposit. Well, that's what happens. It's used towards the down payment at the time of closing. Speaking of closing, when you're buying a home and you've arranged your financing, hopefully through your favorite mortgage broker, you then go to your law office, your real estate lawyer's office, and you've got to sign a bunch of paperwork. And the fees that are charged at the time of closing are going to be your lawyer's fees, land transfer tax, title insurance, and some other discretionary fees that might be in there as well. But at the time of closing was when you're going to be paying those fees, generally writing a check to your lawyer about the week before closing. Those fees can cost up to 2% of the total purchase price. Okay, so if you're buying $1 million home, you're going to want to make sure that you have about $20,000 ready to go for closing costs. Okay, it's not set in stone, but it's a good ballpark, about 2% of your purchase price going towards closing costs. Why did your mortgage payment just go up? Well, you've probably got a variable rate mortgage. Actually, you've got a adjustable rate mortgage. If your mortgage payment just went up, you have what's called an adjustable rate mortgage. And what's happened here, your payment is actually fluctuating with the Bank of Canada's overnight lending rate, which is then tied to the prime lending rate at your bank. So in your mortgage documents that you would have signed at your bank or your broker's office or virtually, it should have been explained to you that your mortgage payment will adjust with the market should the market go up or down based on the Bank of Canada's rate policy. So if your mortgage payment's just gone up in the month of June and July, well, this is why. You're actually in an adjustable rate mortgage.